When it comes to trading, we have two different types of capital. We have physical capital and we have mental capital, and it's important for us to preserve both. And so I was watching a recent episode of Ask Gary Vee, and he had some really great advice for someone that was a new entrepreneur and he was ready to go all in on his business, and he started to break down the difference between physical capital and mental capital. And so I'd like to share a bit of that with you right now. As I personally continue to learn and grow, one of the things that I'm becoming more and more aware of is that the rules for success are very similar straight across the board, whether you're trying to be an entrepreneur, an investor, a trader, an actor or actress, or an athlete. Well, whatever you want to try to be successful at, the rules are going to be the same really across the board. And so that's why I've started to become a lot more aware of when I'm hearing different kinds of advice from Gary Vee or from Oprah or from anywhere else, to start to synthesize that information and see how it can apply to both myself as well as be helpful for you as well. On this channel in particular, and in ChartYourTrade and in many of the different blogs that we've written, you've seen that, well, we've already spoken about both physical capital and mental capital and how it's so important to especially manage the mental side of the game, because if the mental side of the game is it gets fuzzy, or if we start to get emotional, and we start to make decisions out of emotion rather than stepping back and trying to be a little bit more stoic in our decision making, it tends to get bad very quickly. And so we want to try to center ourselves. And so I want to link this video of Ask Gary Vee. I'll link it somewhere up here, and I want you to go check that out, whether you check it out right now or check it out after you're done watching this, but definitely check it out. Fast forward to minute 6 or 6:30, and just listen to that segment. The whole episode is great, just listen to the whole thing, but that part in particular is what we're talking about here. The mental capital versus the physical capital, and how the mental part can really break down into two buckets. And so I'll just show you right here on the sketch pad, well, what Gary was talking about. So he was talking about the physical capital versus the mental capital. And then the physical capital, for the most part, and even in this particular episode, the person wasn't really having a problem with the physical capital. It was more on the mental side. And so the mental side can break down into two components as well. And I'm stealing this example from Gary, so thank you very much. But it really is a great example. He broke it down into yours and theirs. Right, so there's my terrible handwriting, but yours and theirs. And so, well, what he was trying to get at was, are the mental blocks that you're having, the mental walls that you're having, are they internal? So are they things that lack of belief in yourself, lack of confidence, things of that nature? Or are you trying to please others? So that's more of an internal, but are other people coming to you with their problems? So like your family having doubts about you trying to succeed, or things of that sort. And so when you're able to break down what it is, if it's your internal struggle or the struggle of others within your sphere of influence, so your friends, your family, your significant other, whoever it is, are they the ones in your environment that are giving you these kind of mental walls? And so the way that you would deal with it, if it's externally, if it's them, then what you would end up doing, and this is a good suggestion, is to be able to be open and honest with them. It's not going to be easy, but you need to have this kind of a conversation with the people that are most influential to you, and talk to them about what you're trying to do and how you feel about it and how you feel about what they're bringing to the table. And quite often, and I've had this conversation too, a lot of what can happen is, well, we may not realize it, but we could end up projecting our own thoughts, fears, emotions onto somebody else, thinking that that's what they're thinking. But meanwhile, if we just have an open conversation about it, then it may, it can be very eye-opening. And then if it's your own internal struggle, something that I've found pretty recently is to meditate. And I've been meditating daily, and I've been using this great app. I'd show it to you, but I'm recording on my phone, so I can't show you the app. But the app is called Headspace, and it gives you daily guided meditation, and I think it gives you 10 of them for free, and then they give you an option if you want to subscribe. But so far, it's been great. I've been doing this for about a month, and it's a great way to really calm your mind and get centered and understand where you are in your own space, in your own head, kind of see the thoughts and understand that you're more of the consciousness of your thoughts rather than the thoughts themselves. And so that's how I've learned to deal with the mental side of things. So another reason why I feel as though this topic is of such urgent importance is because of this survey that I did on Twitter just the other day. So 57% of the people that responded to this survey said that yes, their performance in the market, so when their portfolio goes up, they get happy. When it goes down, they get upset. So 57% of respondents said that. And while you could have a lot of nuance to that question, right? So you could make a lot of money and that feels good, but or you could lose, and that obviously stinks. But is it something that's really going to determine your happiness? What I've found is the more I'm able to divorce my emotion from my portfolio and get less excited on the highs and get less down on the lows and just kind of stay flat, the better my overall performance is. So if I'm finding that I'm getting super excited and happy when I'm outperforming, that's something that could lend into additional biases that start to give me overconfidence and start to take trades that might not be as good as they might be. I might end up breaking or bending rules because of my overconfidence. Then if I start to lose and I'm letting the portfolio or my performance start to get me upset, then I might become a lot more defensive, and I might try to either do revenge trades and try to make that money back very quickly, and that's a very slippery slope. Or I might get defensive and fearful and afraid, and then when opportunities do come up, I may not go in at all, or I may end up taking a much smaller position simply based out of fear, not due to market conditions. So the point is that the more that we're able to separate our emotions from the performance of our portfolio, the better. A very, very, very temporary feeling of happiness or sadness because of the portfolio, yes, I do get that still too. And I'm still working on separating my emotions from the portfolio. But the more that we're able to do that, the more level-headed we'll be able to be, and the more objective we'll be able to be as well. So for any of you that answered positively to that Twitter survey, if you're part of that 57%, or if you're watching this video and you feel as though you fit into that category of, yes, you do get real happy when you're up and you do get upset when you're down, think about that. And it's something that I think will help your performance over the long run. And remember, though, whether no matter what your trading time frame is, think of your trading as a marathon rather than a sprint, because we want to be successful over the long term. Try meditation, try to understand your emotions, and the more that you're able to separate your emotions from your portfolio and not let your portfolio's performance dictate your happiness, the better off I think you'll be. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, if you like this video, click that thumbs up button. That's always going to help us out a lot. And also make sure that you subscribe to the channel so that way you get every single update. Now, if there's somebody that you would like me to profile in a future video, or if you want to see some other topic covered, leave that in the comment section below too, and I will do my best to make it happen. Thanks again for watching, and I'll see you again in the next video. Take care, and stay tuned for some bonus offers. Look, the bottom line is that I want you to succeed in the stock market, and trading is difficult. It really is. It takes a long time to learn and to get good. But once you do, it's a skill that's going to last you for the rest of your life. So the climb is worth it. What I want to be able to do is to offer you a hand, offer you a rope, offer you a ladder to be able to climb up a little bit faster. And so we have an advanced stock report service, and there's a lot of different benefits within that service. One of them is a model portfolio, and we give you every single trade that we're taking, and you're able to see exactly where to get in, where to get out, how much to risk, and how these trades are being managed all throughout. And this, just following this portfolio allowed me to triple the return of the S&P 500 last year in 2017, and the year before that, I doubled the return of the S&P 500 just by following this model portfolio trade for trade for trade. And so I want you to be able to test this out and let it help you. And so I want you to be able to test it out for 3 whole months, and we're going to offer it to you for only $27. So use coupon code, and I'll link it somewhere down in the description, or I'll link it somewhere over here too. Use coupon code 3427 and go to ChartYourTrade.com and enter coupon code 3427, and you will get our advanced stock report service for 3 whole months for only $27. That is a fantastic offer, and it's going to be a great way for you to accelerate your learning and to be able to take advantage of the market and the opportunities within it right away. So go check it out, and thanks so much. Let me know what you think.